Good afternoon, everybody. My name's Andy Nightingale. I'm the Managing Director at Worksmart. Sorry, Jules, do you want to go on to the next slide, actually?
I will do, bear with.
That's all right. So my name's Andy Nightingale. I'm the Managing Director at Worksmart. So just for those who are not aware of who Worksmart are, so we've been around for about over 20 years, supporting many of the largest financial services firms in the UK, providing basically knowledge and insight in terms of their regulatory responsibilities. Also delivering multi-award-winning innovative technology to help them meet those needs. And also, just recently we attained the ISO 27001 standard. And the reason I mention that is that we have an objective to become really the most trusted supplier of and most trusted partner for our clients. And with that, I think with the sensitivities around data, etc., having a recognised global standard just underpins really that approach that we're taking. So, Jules, over to you.
Okay, good afternoon, everybody, and adding my warm welcome to Andy's there. For those of you that are here today that I've not met either virtually or face-to-face, then welcome. Just to give you a bit about where I fit into the picture in respect of SM&CR, it's my responsibility to work with the wider business to look at regulation and look at regulatory change, looking at how it impacts our existing products and how they serve our customers, but also to look at new opportunities and new regulation. And as Andy said, we've been around for an awful long time, since the 1990s, and we've got our roots firmly really in people and process risk management, very specifically around complaints, training and competence and those typical areas. So for us, when SM&CR was talked about and being formulated, it was really a great opportunity for us to practice what we preach, really. For those of you that might have seen the strap line at the beginning, our strap line, regulatory change meets business advantage. And really what my role is with many within our organisation, a lot of us have worked in financial services in very operational roles for a long time. And our mission really is to take regulation, look at how we can use technology to support it, but rather than just tick the boxes, allow it to help people improve things, whether it's business processes, risk management, oversight, transparency. And so really SM&CR is a gift for a firm like us. And that's really taken us on quite some journey, I think I'd say, Andy, wouldn't you, since about 2015 when it was first announced. So, our aim is today to sort of walk you through, share you some of the information and the experiences we've had over the last 5 years, and where we believe a company like us fits into the wider picture.
Okay. So just before I go on to this first slide, you'll notice, I'm afraid, there's no sort of questions or the ability to ask questions during this. We have quite a tight timescale, but what we will be doing at the end is inviting you into our virtual room to come and have a chat. So please bear with us. There's quite a lot of content to get through in a short space of time, so I didn't want to distract from that. I'm just starting with a relatively simple slide because I think it just touches on themes that I think we're going to go, which we'll repeat throughout this session. So these are a couple of just quotes taken from the FCA website just yesterday, and I think the key point I'm trying to get, I really just want to focus on here is that the FCA particularly have been really emphasising their determination to support the development of Reg Tech, and really see it as contributing significantly to the benefit of consumers as well as the wider industry. With regulation becoming so much more sophisticated, I think the use of technology clearly does offer an opportunity for both regulator and firms to monitor, learn, improve, and just again, just to sort of build on and leverage, if you like, the sophistication that comes with that. I think this is only going to grow. I think the regulator has been quite clear that SM&CR is a very, very big piece of regulation, but there's much to follow. I think many lessons to learn from that as well. And with that complexity, maybe, you know, a need for standardization will be one aspect, I think. But I think using technology to drive, report and understand is going to be very important. And I think, you know, looking at where the FCA commentary is at the moment, reporting really is going to be the first place they look at. Because clearly that's the outcome that they'll be looking to assess and then use to drive forward change.
I think as well, Andy, if I put my regulatory hat on it, as it were, and look at it from the regulator's point of view, as well as from the industry's point of view, if we look at how many dual regulated firms there are and core firms, you've got about 1,700 dual regulated firms that are the banks, the building societies, the credit unions and the insurers. But then in that wider pool of people, you've got those 60,000, just under 60,000 firms that the FCA supervises from a conduct perspective, that they refer to as solo regulated firms. So from their perspective as well, they need the firms to be embracing technology to help improve, manage, mitigate risk. But at the same time, they need that because the regulator also wants to be data driven, wants to be able to spot issues within the market quickly. And the only way they're going to do that with such a diverse marketplace and so many people in it is that if there's an adoption of Reg Tech on both sides, from the regulator and the regulated entity.
No, absolutely agree.
Okay, so if I move on and have a look at what the FCA is saying about regulatory data, I think there's an acknowledgement that it says, okay, we know it's complex, we know it's expensive, so therefore we know we need to look at doing something differently. But for me, that's just the back end of the process, that point at which you have to tell the regulator, for example, some details about transaction reporting or complaints reporting is the back end of an awful lot of work. And what us Reg Tech providers should be doing is constantly challenging ourselves to say, you know, is this really good enough? Are we giving people do things that just meet the regulation and enable them to tick the box? Well, in some pieces of regulation, yes, that might be actually exactly what you need to do. But with SM&CR, it's not about that. And I think the regulators put it on record that if people see this as a tick box exercise, something's gone a bit wrong in the FCA and the PRA's communication of what they're looking for. I think this other point that they've talked about here, and it's twofold, is that, you know, the regulator's saying, actually, it's really difficult for us to supervise the market because, you know, if you look at the regulatory returns, we all see the world through a different pair of eyes, and we can also look at the rule book and look at the returns we need to complete. But sometimes the data that underlies it might be drawn in different ways, and therefore the regulator's not looking at like for like. So I think you've got that issue, and then you've got this issue, and it's something that I've really noticed when we've been working with firms on SM&CR, because there's a greater level of complexity, and because in organisations, especially the larger ones, where, you know, they have to have a narrower role because of the complexity of the organisation, that you have fewer staff that have this complete view and this regulatory expertise. And I find it sort of, I have a wry smile sometimes when we look back in 2015, 2016, when the banks were looking at SM&CR and looking at solutions, that they looked at solutions and then went, no, do you know what, we're all right, we'll build one ourselves. Well, when you look at Reg Tech providers like us and a lot of people that are out at the event today, we'll all know that we could pump millions of pounds in to developing a very robust regulatory technology solution that a firm from a standing start can never hope to do. So actually, from a regulatory data point of view, there is some sense in firms looking at what is out there and challenging themselves about how they can do things better, especially as SM&CR lends itself to that. I think, Andy, you and I were talking about this earlier, weren't we? When we were talking about the landscape, you know, and what it looks like and what it feels like at the moment. And I think the first thing from the regulators, actually, the really good thing is we know that they're encouraging development. They've had us at Canary Wharf, and they've been looking at our SM&CR solution because they're very interested in tech vendors to see what's on offer so that they can stay informed. They've just finished a data sprint where they've been working in conjunction with some regulated firms around digital regulatory reporting. And I think from the firm's perspective, there is a moment now to have a think about this, and just let me give you another angle. And that timely and accurate regulatory reporting is critical. Many firms don't do that. So we know we've got our regulatory reporting that we need to do, and then we've got ad hoc reporting and different returns. But actually, if your data isn't always on time, if it's not accurate, if you can't pull together the data you need for some kind of involvement in a thematic review or a supervisory initiative, actually it builds a picture with the regulator about how you feel about that particular area of regulation. And because SM&CR underpins absolutely everything, if you don't have your house in order in this particular area, I think it definitely says something about the firm that is possibly not the way that you would want to be portrayed to the regulator. But from your point of view, Andy, I mean, you see this as opportunity. Obviously we would, but you know, you've got a view about what opportunity this gives the firms.
I think so. Also, you know, I think there are some pitfalls as well. I mean, you're right. You know, the point you make about this covers everything. It really does. It touches all parts of the firms. And yeah, we've seen. You know, I mean, you look at Worksmart. We've had an assortment of customers who have come to us. So we have had those ones who have tried to build it themselves. They've just got a little bit kind of out of control in the sense of trying to understand the scope. It's got a little bit expensive, and they've ended up coming us and asking us to kind of help them out. But it's you know, in terms of the opportunity to, you know, this to me is the start. SM&CR is the start. There's a, you know, it's a huge piece of regulation. You know, relatively speaking for the FCA, going into many firms in a short space of time. And so getting it right at the beginning is critical, and it's only going to grow. You know, I think, you know, starting later on, there's an awful lot of data you've got to try and bring together to get everything up and running. But also, you know, a kind of a word of warning as well, a word of caution really is kind of, for some firms, don't try and boil the ocean. You know, we're responding to RFIs and RFPs, etc. And what we're seeing is that there are some organisations there that are just trying to gold plate and over-engineer everything. Their interpretation of the regulation is about, okay, well, let's just try and make absolutely everything happen now. And I don't think that's how this is going to work. I mean, you listen to the regulator, and they talk, you know, they talk regularly about, you know, how this will evolve. You know, they've you know, different firms are coming on board at different times, and everybody's learning. I go back to when the banks first started it under the IAR, the Individual Accountability Regime. We were working with an awful lot of banks at the time, and they've all learned lessons. We learned lessons. The regulator learned lessons, and that just shows the operational side of this regulation and the extent to which it covers firms and their activities. It's you know, it is something that's going to evolve, and I think it's about trying to keep in line, keep close, and understand how that evolution is going to work. And you know, from a Worksmart perspective, we stay very close to the FCA roadmap, not just on SM&CR, but on all of their activities, to make sure that we are appropriately kind of in line with what they're doing. But we'll never try and second guess them, because there's too many lessons to learn as we go. So it is great opportunity. It's a great opportunity to bring efficiencies and all of the good stuff that technology will do. But as I say, you know, don't go overboard and create yourself, you know, problems both, you know, medium and long term. If you have to start undoing technology, it starts to get a little bit expensive and can be a bit complicated.
Yeah. No, absolutely agree. And I think we've seen that time and time again, haven't we, where we'll sort of say to organisations, you might actually want to take a little step back and let it run for a while before you decide to increase that level of complexity that you're looking to achieve.
No, that's it. There's an initiative here I just wanted to highlight, actually, because it's you know, I touched on reporting a little bit earlier, because really that's where, in terms of technology and what it can possibly do, we see the regulator investing quite a lot here, because they have, in fact, I know that, so they've kicked off this initiative, so the Digital Regulatory Reporting Initiative. So along with many firms, Worksmart have been involved in it. And I know that the FCA have invested really quite significantly in bringing skills, so analysis skills for huge amounts of data, with a view to deriving and understanding what that data is telling them, so they can then make improvements, changes, learn from it. I was listening to the HCA talk a little bit earlier today, and I know they mentioned something called subtech, which I'll be honest with you, I'd never heard, but I understand it now in the sense that it's another defined branch of RegTech. So to me, you've got FinTech, RegTech, and we're now getting almost into those sub branches. And subtech, they described as supervision technology, and it was really honing in on how actually internationally, but I'll probably talk a little bit more about the FCA. The FCA are just understanding and seeing that data and the fact that there are so many sophisticated tools out there, be it sort of robotics, AIs, interpretive tools, that information really can give that deep insight into trends, and help inform, provide the insight for regulations to evolve into that perfect balance, really, of promoting and encouraging business whilst protecting the consumer, which is what the FCA is so keen to do. I think, as I say, the other part I really quite like about this initiative is how much they've chosen to engage the business, to engage with firms, to get their views, be it technology firms, to be it regulated firms, and I think I think it's a challenge because again, I was on I can't remember who. Sorry, I can't remember. I think it's I can't remember another talk that I was listening to this morning, and they were talking about, well, okay, if the regulator starts looking for standardization across everything, does that start to undermine the innovation that potentially firms, be it again regulated firms or technology firms such as Worksmart, can bring to solving these problems? And so there's quite a balance. But the thing is, I think over time, the drive that the regulator, the direction that the regulator is going in terms of using data to drive improvements and evolution in regulation and how it is applied to firms, I'm afraid you can't get away from the fact that starts and finishes with the information that they have. And I think to evolve that, they'll be asking for more and more information as we go. And we work with some of the big firms who, there are some firms out there who've still got very, very large teams of individuals who are bringing together disparate sources of information and manually putting into a report in order to push that out. And I think with this direction, with this trend we're seeing, I think that's going to become more and more untenable and more expensive and potentially more risky. So I think it is. It's a conversation that yeah, of course we're going to be having that, but I think the industry are seeing the need for the capture and the appropriate management and the reporting of the information they have, and it's just going to grow, I think. And it's, I guess, yeah, I think for some firms it can be a little bit intimidating, but I think the FCA are trying to do the right thing and they're trying to engage on the right way, but I think this is only going one direction.
Yeah, well, absolutely agreed, and I think that's why that talks really quite nicely to the next slide that we've got here, and that was SM&CR regulatory opportunity. Now we talked about at the beginning of the slides about why technology is the only workable solution, and I just wanted to share with everybody some research that they might not have come across. Now, UK Finance, who used to be the British Banking Association, did a rather large research project back in 2019. In fact, it took them over a year, and it was the largest survey of its kind on SM&CR, and it's separate to the FCA's banking stock taking report, and it was with one of the law firms, and they looked at 25 banks, they looked at 60, they interviewed 60 senior managers, and they looked at 2,000 data points, and there's just a few things that came out of that I wanted to share. And the first one was that when 79% of the senior managers said that their responsibilities and accountabilities within their role were now clearer post SM&CR, so that's really positive. 88% of the senior managers interviewed, said that they thought SM&CR had driven a meaningful change in behaviour, and 79% said that SM&CR had helped them change the culture in their firm for the positive. And if I look at the first point I've got on there, enhance your governance and oversight, I cannot tell you of one bank that we have worked with that will say to you SM&CR hasn't enhanced their governance. It was really painful, as most firms will know, to go through the process of SM&CR, but the upshot of it was, I think in the 99.9% of cases, was that actually it improved their governance and oversight. And, you know, we're looking at this from actually that, you know, there are opportunities here. Everybody in every firm knows they've got a process that doesn't work properly. So whether it's a performance appraisal process, whether it's an e-learning process, managing continual professional development, whatever it is, we, you know, all firms have got issues. And what we've tried to do, I think, is say, well, actually, it's a regulatory driven opportunity where firms can look to embrace Reg Tech, where we've looked to say, what does the regulation say? And plus, what other processes can we improve as building into the technology that will allow people to gain benefits, be it process, be it MI, be it risk management. So I think we're quite happy, Andy, I think, to invite people to chat with us in the virtual room afterwards if they are concerned that SM&CR doesn't provide them with an opportunity, because in the experience of what more than 100 regulated entities that we've worked with in the last few years, that's always been the outcome. I think the other thing is, I was saying to Andy that there were two speakers speaking in the last week from the FCA. There was David Blunt, that many of you will have spoken, who's the head of the conduct specialist, and then you've got Peter Ewing, who's one of the technical team in that area. And they talked very much about SM&CR. We're not telling you what your culture should be. One size doesn't fit all. It's impossible for a regulator to define that. But what we've done is given you a framework and a tool that we believe will help this. So then I had a look at, so what does the research say about culture? It's easier when you're busy, when there's not enough money, there's not enough staff to go, actually, we just tick the boxes. But that's not what the regulator's looking for. And actually, that's not what we want when people use our software. We want people to embrace what they're looking for and try and use it to help them improve process and people management. And Grant Thornton did a study last year around culture and value. And again, there's a couple of stats. So public companies with extremely healthy cultures are 2.5 times more likely to report significant stock price increases in the preceding year. That was one stat. Now, this one surprised me, but when you think about it, it kind of makes sense. 49% of employees are willing to take less pay to work in a company where there's a better culture. I was staggered by that initially. And then more generally, private companies with extremely healthy cultures are 1.5 times more likely to report average revenue growth of more than 15% over the preceding 3 years. So again, I think it's very hard to argue that cultural improvement can't drive business benefit, and the regulators saying they want to work with the industry to help improve that. So I think that's fantastic. But what I wanted to do is just give the people that are on the session with us today a scenario to consider. So I've got a made-up firm here that is a regulated firm. They're regulated by the FCA because they're solo regulated, and they're enhanced under the new regime, which means that they are have the greatest level of regulatory requirements. And I've just given you some samples of this. So if you're not familiar with the full detail of the regime, the language that you're seeing here is just some of the things that have to be allocated and managed and overseen as a result of the regime. Effectively, you have 3 things in the regime: senior managers, certified staff that have the possibility of causing significant harm to the business if they're not managed effectively, and then a wider conduct rules population. But what happens with SM&CR, if we go forward 3 years, SM&CR isn't something that you just do, you allocate, you write down who's got what, where and when, and you apply it. It moves and changes on a regular basis. And if you're an enhanced firm, you have to submit a management responsibility map to the regulator. And every time you have a change of a key part of information, then you have to resubmit that and all of the associated paperwork with it. So if you think this through, you've got senior managers, and over a 3-year period, you have 5 new senior managers. Some come internally, some come externally. But what it means is the allocations and the accountabilities all move and change. So that's all builds up. That's a data build. You have certified staff, and every year you have to verify their competence, and you have to say, are these people fit for purpose? And if they're not, you have to think about, what support you're going to give them or redeployment. But you're going to have to do an awful lot of things with them to be able to evidence whether they are fit and proper or whether they're not. And then for your wider population, which will make up, in most firms, the majority of people, you've got all sorts of things that you have to do around breach reporting, that you have to do for them and for certified staff, where you're notifying things. You have to do regulatory references for senior managers, certified staff, and potentially conduct rule staff who are moving on to bigger and better jobs. So all I'm trying to show here is that over a period of time, from the point at which SM&CR is implemented, if you are not utilising technology to help you manage this and manage your governance and your oversight, very, very quickly it becomes very difficult to do this. If you are trying to use a bolt-on to a system that was never intended for it, if you're using a combination of Excel spreadsheets and paper, really, really challenging. So I think I'll hand over to you, Andy, for this bit.
Yeah, I'm aware of that we're running over a little bit on time, so we'll just sort of rattle through the last bit. So we can always talk about this stuff forever, can't we, Jules? But I think just sort of as we sort of come towards the end of this, I think it's as Jules has mentioned, I mean, SM&CR is a huge piece of regulation, the biggest in many, many years. And it's not just about rules, it is also looking at that sort of cultural impact, etc. And the regulator has been very clear just how important this is. It's very, very much, they're banging that drum about protecting the consumer from decisions and responsibilities made by the financial services organisations. And as we go through transition from implementation, which we're still in, really, there's still more firms to come on board that move more heavily into the operational side. The regulator will be looking at how firms have taken the need to conform to the new rules, how they've implemented it, and they'll be looking for various signs. So, so if submissions are late or inaccurate, or they believe there's been a lack of investment in trying to implement SM&CR, and the firms can't explain why or whatever. It's likely that those firms will come under the spotlight of the regulator, and they will want to dig a little bit deeper. They are, they've been very, very vocal and really quite robust in just how important this is, and how they seek to learn a lot more, let's say, about how organisations operate, with a view to using this as a springboard to change and evolve and refine, an awful lot more of the regulation and focus more of the regulation that is out there. So. It's important. I think firms need, I think that the earlier firms are prepared to robustly adopt this and really start sort of getting that process embedded, I think it's going to be of great benefit to them.
I absolutely agree. Absolutely agree. And I know when we were talking about this, that might look like a bit of a cheeky title there, but I think what we've seen in the banking sector is, if we ignore those words, we've seen this trajectory of action. If we go back to 2015, where we could see that projects weren't resourced effectively, they were underfunded, and actually may have been a focus on, well, we need to spend this much on our legal support and interpretations, but we're not going to spend any on tech. And then all of a sudden, what happens over a period of time is you get, a very unexpected event period of time like we're in at the moment, and you've got the project team that implements, and then they walk away. You haven't got your BAU processes, so you might get yourself past the first hurdle, but then things go downhill from there. And from a regulatory perspective, you might not talk to a regulator apart from your regulatory returns for a long period of time. And actually what you don't want is not be in the position of having used that to shift to the culture that they're looking for. So I think it's one of those things where actually it's timely consideration of how Reg Tech can support firms in that manner. But I know, like you say, we're over time. So I'll just finish off on a couple of points, and I think you've got a final point then to make. This is the biggest change in the financial services landscape, in my opinion. We've been working in financial services now since the 80s, many of us, and this is a bigger change if I think back to the Building Society Act in 1986, which is an awful long time ago, but this is bigger than, it's bigger than that. And so firms need to consider what they're going to do with that. We have got a team on hand. Andy and I will move over to our virtual room, and we'd love people to come and chat with us. We've got some documentation that we can give away that will help you with your certification processes, help you with your directory things, and we would, really like to chat some more on the topic. But I know, Andy, you've got a few final words to close us down, I think.
Yeah, so thank you very much indeed for bearing us, and sorry for going a little bit over time. But I just think, as I say, SM&CR it does, I think, offer huge opportunity for firms. I think it's very much about embedding it in the way that firms do undertake their responsibilities and their process and their work. But also, I think that umbrella of cultural change that the regulator are keen to look at as well, I think is so important. And it's something that they will absolutely, be focusing on as we go into this operational state of SM&CR. But there's a lot more to come. I think there's an awful lot more to come. And I think, the last thing people want, I think the last thing the regulator wants, is to be disruptive to how firms operate. I think we're really trying to create, from a cultural perspective, drive through into the right processes, creating the right and providing the right information that they will then take and try to improve. And I do think it's a basis to really create a massive improvement between regulator and firms. I think everybody will get the benefits out of it. So. But anyway, so thank you very, very much indeed for your time this afternoon. Again, apologies for slightly overrunning, but we do get quite passionate about this stuff. And hopefully if you can join us in the virtual room, it would be much appreciated. It'd be great to talk to you. So, okay. Many thanks.
Thank you very much, everybody. Have a good rest of the conference.